From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. This Thursday in a day where we have seen a lot of wobbles across equity markets. Of course, we woke up to that news that the S&P 500 had its worst session since December 2022. A lot of concern about whether or not this AI hype is sustainable. Tesla down more than 12% after the EV maker reported its lowest profit margin in more than 5 years. We've seen that weakness flow through across into the Asian session. You can see there the CBO 200 index is down by more than 1%. So it really just comes, of course, to the themes of the day and the global sell-off just continuing. We've seen weakness coming through across, as I mentioned, global markets, the weakness in tech players overnight flowing through into the broader market too and into our market. It's been really hard to try and find some winners today, but no surprise that you are seeing a flight to safety. So a lot of those gold players looking quite good. Newmont, of course, reported after the bell overnight and its shares up by about 1.5% in a down market. Now, just adding to the negativity was a miss and I guess a cautious outlook from Macquarie as well. So Macquarie shares tracking lower by about 3.6%. $201.19 is where they sit as we head into the afternoon trade. And this scandal, if you like, at ANZ continues to grow here. We're hearing that ASIC says they suspect ANZ broke the law in that $14 billion bond sale and that the scandal fallout could head to the very top, including the CEO, Shane Elliott. Now, I was talking to somebody off record earlier who says, look, an inquiry like this from ASIC could take a year or more. They may have to interview something like 1,000 plus employees, but of course it's just keeping very much in for this implication of the bond trading scandal that is alleged at ANZ. All right, let's have a look at some of the sectors of the day, kicking it off with those tech players which were hit hard after the miss on Wall Street overnight. WiseTech, Xero, NextDC, all under pressure. The miners as well, we had Fortescue, as I mentioned, out with an update. Gosh, a 5% drop from Fortescue. Impressively, though, still holding above $20 a share. Elsewhere, we're having a look at the banks today. I mentioned ANZ. Its share price not really being hurt by these news headlines, but down 0.2%, $29.36. CBA still holding pretty strong at $132. And some of the top corporate stories, of course, we talked about the ANZ updating the market on investigations into its data reporting process, and this around allegations from a 2023 bond transaction. Shares only down slightly. Seek also in focus. It's written down the value of its Chinese subsidiary by $141 million, and it's blaming this on China's weak economy. Fortescue, we mentioned, updating, and that missed expectations, while Macquarie, which was our stock of the day, said a weak quarter for its investment banking division dragged down earnings in an otherwise flat result. And getting to that stock of the day, we heard from Howard Coleman from Team Invest and Grady Wolf from Bell Direct, who joined David Koch.
One of our biggest philosophies is you want to be sure or virtually certain about earnings per share 5 years ahead. Because of the kind of business Macquarie is in, how could you possibly be sure or virtually certain of earnings 5 years ahead? It's too dependent on outside circumstances. So, on that basis, it wouldn't make one of our top 20, but it certainly passes all our filters in terms of, reasonable return on equity. Debt's not really an issue with banks to the same extent, and earnings per share most years growing, but too unpredictable.
Yeah. The result was unsurprising. Where the areas where they dipped, we were expecting. The areas they were strong in, we're expecting. So again, it's probably today the share price depreciation is probably people taking profits more than anything, because as Howard said, 24 PE is very, very high and very overvalued for a banking sector. You'd expect that more in a tech stock or something like that. So Macquarie is actually my pick of the bunch among all the financial houses.
All right, let's welcome our guest to the COB. Dylan Wu from Pepperstone joins us. I mean, Dylan, does this sort of AI tech-fueled rally, has it hit a speed bump?
Hi, Andrea. Thanks so much for having me. So as you said, I do saw the AI and tech and including Nasdaq took a hit, and we've also seen actually Nasdaq future breaks the 50-day moving average, which many use as a trend filter. So I think investors are now questioning their positions in large tech stocks. Like, for example, Alphabet Q3 capital expenditure guidance disappoints, obviously, and no real guidance to inspire from Tesla with some, outrage poor numbers. And we can also see semiconductors and the AI is being sold off. But at the same time, are these earnings really that bad? I mean, probably let's not even talk about Tesla because it is indeed disappointing. But Alphabet Q2 EPS and revenue both beat. Their cloud business did well as well, and they announced dividends. And IBM's performance was excellent. However, the market is like, okay, but I'm selling anyways. So I think people might now be releasing or reassessing tech stocks and AI, wondering if they were too heavily invested before. And actually, we can also add concerns around China's growth trajectory, poor PMIs in Europe, and a bearish opinion. Piece from ex-New York Fed member Bill Dudley, and investors and traders are de-risking at the moment. Plus, with everyone on the same side and positions being very dense, I think any sell-off could have a major impact on the market.
Yeah, well, we saw that today, Dylan. I mean, it was not a great day at all across markets. But when you look at the Australian market, we're so very differently set up than the US market. We do have a couple of tech stocks, and I've mentioned they're under pressure, but we're really about the miners, we're about the banks. So how does that all, I guess, differ in terms of taking a longer view here?
Well, because, like some global de-risking and sort of in tax, does somehow affect the Aussie equities, but strictly speaking, Australia does not really have AI stocks, so the impact is relatively limited. Like as you said, we're more relying on copper in mining industry and the banking sectors. Well, I do think next Wednesday CPI might be more of a concern or more of an event actually to keep an eye on for the Aussie stock traders, I reckon. And since inflation is getting back really slowly to the RBA target, especially the services inflation is still far higher from where the RBA would like, and they are still open to another hike. So now the market has priced in about 30%, 1/3 of a chance that the RBA will raise rate in the next meeting. So I would say if the Q2 CPI data is high, it might prompt the RBA to make its move. And if we use a bit of scenario analysis, I feel like if the trimmed mean inflation is above 4% year on year, the implied probability of a hike will increase to 50 to 60%. That would be bullish for Aussie dollar, but harm the Aussie equities performance. And if the number is below, say 3.8%, the situation would be totally different. And obviously the ASX 200 is a better asset to trade compared to Aussie dollar from my perspective. Because Aussie dollar now is far away from a rate play, but more of a Chinese risk proxy. China is obviously not doing great, and copper got smashed, iron RE is nothing better. So there are so many noises in the Aussie dollar trading, but the equity market is more of a pure or directly responsive to the CPI. And we would consider that it's obviously a huge difference between one symbolic hike, then we're re-entering the hiking cycle. Yeah. Probably one of hike wouldn't harm much, but if there's a hawkish hike, people may expect recession, and the stock might see significant selling.
And Dylan, when it comes more broadly to what we're seeing in the economy, we know we're very heavily impacted by what happens in China too. You could argue that the third plenum was kind of a little bit of a nothing burger, if you like. But what are you seeing in terms of resistance levels for the key Chinese markets?
Well, I feel like probably the CM50 will find some support, if not at 11,830, then probably at 11,390. Because as you said, probably the third platinum should be revolutionary, but it turns out to be a non-event. And because CM50 is actually largely driven by the domestic investment, so it's less sensitive to some political risk, geopolitical risk, and external environment in general. And essentially, the CM50 greatly benefits from a CCP put. So the same way, basically, that Wall Street is underpinned by the Fed put. And in other words, investors are safe in the knowledge that if things were to turn sour, authorities will step in with policy support. So they might still feel comfortable to sit further out on the risk curve and somehow raising the bar of any significant downside to be seen. And actually, interestingly, the top leadership reiterated this year's development targets in the third plenum is very unusual, as this kind of, set of 5 to 10 years economic direction kind of meeting. So I think they're likely to enhance policy stimulus in the third quarter, and obviously the upcoming Politburo meeting and the NPC meeting, the National People's Congress meeting next year would be crucial to watch out for.
All right, Dylan, really good to have you with us. Thanks so much for coming on AusBiz. Dylan Wu there from Pepperstone. Just want to have a quick look again at what we're seeing on the market as we round out the day's trade. We're down by 1.1% on the CBO 200. On the ASX 200, I should say, 91,7,872. Let's have a quick look at what we saw in terms of the market leaders and laggards in today's session. We touched on Coronado Global Resources coming through with an update, and the market seemed to like that. Adore Beauty has been a stock that has been under significant pressure, but had a good day today. Immutep Newmont, of course, in the wake of its results overnight. And GPT also looking good. To the downside today, we saw Regis Resources. It also came through with an update. Down by more than 9%, even though gold was tracking higher. Block really just following that weakness in tech. Fortescue we've touched on with its update, and Liontown and West African Resources also under pressure. In the small end of town today, the winners and losers included Talga with the winners, Southern Cross Media, AV Jennings, Sheffield, Tamerwood, and to the downside we saw weakness coming through from the likes of Orion Minerals, Arafura Rare Earth, Sierra Resources, Elixir Energy and Big Tin Can. All right, let's have a look at what we are going to see in the overnight session. A lot happening. US GDP growth for the second quarter, new home sales, we've got those weekly jobless claims. Also, ECB President Christine Lagarde speaking, and a number of earnings coming through. So we've got the likes of American Airlines giving us a pulse check on how tourism is faring, AstraZeneca in the health space, Hasbro, Honeywell, New York Community Bancorp and Valero also coming through with numbers. Looking ahead to what we can expect tomorrow in the region, we've got June retail sales, mineral resources quarterly update, the New Zealand ANZ consumer confidence and Tokyo core CPI all coming through. Might just double check about retail sales, but this doesn't normally come out on a Friday, but I've been proved wrong before. But we will, of course, bring it all to you tomorrow. And, of course, the market down by 1.1% on the CBO 200 index as we close out the day's trade. All right, we'll catch you again 9:45 Eastern tomorrow.